The old school way was like, don't borrow money, don't have any debt. Debt is a great thing, and financing is a great thing when you're using it as a tool to grow your business for tax advantages. So you really need to know and understand financing.
What's up, YouTube? Welcome to the Credit Plug channel. So for today's video, we have a very special guest. We have the CEO of National Business Capital, Joe Camberato. Welcome to the channel, Joe. I definitely appreciate you taking time out of your busy schedule to speak with us and even address, some of the questions that a lot of our subscribers have.
Yeah, my pleasure. Thanks, Antoine, for having me on, and shout out to all the Credit Plug members. And much respect to everything that you're doing. Love what you got going on, and all the great content that you're putting out there.
So let's get started. Can you let the subscribers know a little bit more about yourself, how you actually came to found National Business Capital? What was sort of your motivation behind starting this company and growing it to where it is today?
Wow, that's a great question. It started back in 2007. It was an idea, a thought. Kind of started in my bedroom, and I just had a bunch of business owner customers in a prior industry that I worked in, and they all had such a challenging time getting financing for their business, like a business loan. They'd go to their bank, they'd get turned down, or they'd shop around at different lenders, and no one really knew where to go. And in 2007, this is kind of like when Google was really just taken off, and a lot of finance companies at that point still didn't even have websites, which was pretty crazy. So finding a lender back then was really hard. There was a world of private lending that truly fascinated me. And I realized, like, if a business owner gets turned down from their bank, they really don't know where to go. There's all these lenders out there. But even if they knew where to go, it's just so time consuming to shop around from lender to lender. And you can be like a 700 credit score, person, have a great business, but maybe it's a restaurant and like lender A just doesn't like restaurants, but lender C loves restaurants. So like, it doesn't even matter if you've got great credit and a profitable business. If you go to the wrong lender or just not the right lender, you might even get an approval, but not the best approval. And I just found that all these different lenders had different documents and applications. So we just streamlined everything. We put it all into a simple, easy process. Now that's a digital application. We standardized the financing application. Our lenders, all these lenders accept our application. And then we've also utilized technology to API or direct connect into lenders' underwriting portals. And right now you can apply digitally. You can connect, do a secure bank connection. So we pull in all your information. We do a soft credit pull so it doesn't affect your credit. And then we have a simple conversation with you. And based on that conversation and some really great technology, we match you to the right one or two lenders really quickly. So fast forward from 2007 to now, we have over 75 different lenders on the platform. We're always adding the right lenders to our platform. And we have lenders from SBA to short-term to long-term, to credit lines, to equipment financing, to asset-based lending, to account receivable financing, and everything in the middle. So, it's very fast-paced. Lenders are changing guidelines. You can imagine through COVID, things have been changing rapidly. But through a quick conversation, through technology, match you the right lender. So fast forward to where we are today, we've helped secure now over $1 billion in financing to business owners of all different sizes, of all different industries, all across the country. And the most important thing, though, is my team here really gets not only the lender guidelines, but they understand business owners and their challenges and their opportunities. And a lot of times, like, an opportunity can be a cash flow challenge that you need to solve it, with financing. And we just get that and understand it. And we really enjoy those conversations because it's really important that you get matched with the right lender. And now today, Antoine, you Google small business loans, a million things come up. Exactly. So now there's too many options, which is it's actually more challenging than less options because no one knows where to go. And you can just get caught up in applying from lender to lender to lender. And, we have to do so much volume here. We fund hundreds of transactions a month. We've done tens of thousands over the years. We know in minutes, we know which lender is going to approve you most likely or not, and which one's going to give you the best deal or not. And that's just the value that you get when you work with, with the national team.
Absolutely. So you touched on a lot of great points. First, thing I wanted to touch on was the challenge for small businesses to be able to obtain capital, because as you were mentioning, there's a lot of different lenders with different guidelines. So as a business owner that's focused in on your day-to-day business operations, you may not understand the different ins and outs of the different lender requirements, the business types. I know that's a huge issue with a lot of business owners. Even if they have, excellent data points such as their credit or their income, one lender might, like you said, focus on one type of business. Another lender might have, other characteristics that they're looking at. So navigating that is challenging for, a small business owner that may not have time to, focus on that or even just dig into the details. So I think it's a great service that you provide, whereas instead of, going to one-off lenders, you're able to evaluate the different data points and then provide offers with just a soft pull. So you kind of take a lot of the guesswork out of the lending process.
And just save time and aggravation. And I think as a business owner, and me being a business owner myself, time's like the most valuable thing. And we only have so much time in a day. So to be, fiddling around online application after application, I mean, we're just providing, value and service around, time and helping people get the best deal so they can focus on what's the most important is getting back to growing their business.
I think this is a good time to piggyback into, some of the data points, because I know, we get a lot of questions in terms of, what credit bureaus being pulled, what's the income requirement for businesses in order to get approved. What does a typical borrower profile look like in terms of time in business, credit quality, gross sales? What's sort of a baseline that a small business would have to meet in order to qualify for a lot of the different lenders you work with?
Yeah, it makes sense, and I get it. So, I think we help business owners that have challenge credit and excellent credit and everything in the middle. So we work with everybody. We work with people just getting started, so 6 to 12 months in business, to companies that are in business for 10, 20, 30, 40 years, generational businesses. But really, like, what lenders are really looking for, most lenders really want to see 1 year time in business. We can help you if you've been less than a year. And most lenders really want to see now, like, that you're doing about $20,000 to $25,000 a month in gross sales. That's at like the bare minimum. Could you be doing 10 or 15,000 in sales? Can we help you? Yes, we can. We'll work, with you on that, and we'll help you make it happen. Lenders really love to see the longer your time in business. I mean, it's just logical, right? The longer the time in business, the more comfort any lender is going to have. They feel like there's some stability, there's some history. It doesn't mean, I've seen companies that have been in business for 10 years and companies in business for 2 years, and it looks like the 2-year company's doing a lot better than the 10-year company. So just because you've been in business for a long period of time isn't like instant approval, but longer, it gives them a little bit. Hey, if you've made it 5-7 years, you feel a little bit more comfortable as a lender. But one year really minimum. What lenders really care about, we can help someone with a 500 credit score, which is, hey, there's we get that growing your business, there's sacrifices and challenges that happen. You sometimes sacrifice your personal credit. I get it. I respect it. Sacrificed my own credit building my business. So I completely get it.
Absolutely.
And then we help via programs for people with 700 plus credit scores, right? I think the biggest, most important thing is lenders want to see consistency in your cash flow. That's really the biggest thing. And it doesn't mean that you have to be doing hundreds of thousands or $1 million a month in business, but when, and they like to see uptrends. Obviously, what just happened with COVID, there was a lot of downtrend, but now people are coming back up. So even if you're doing like $10,000 and $20,000 a month in sales, is it like 10, 11, 12? Or is it like 10, 8, 5? That's a problem if it's going down, right? But if you're like 10, 12, 15, 20, 50, like that uptrend is always really good. But what's really important is lenders like to see, because most deals, if you're not putting up real estate, which a lot of our programs, we don't utilize real estate at all. But if you're not putting up real estate, if it's not backed by a large piece of collateral or like an asset like a receivable, then it's all coming down to your cash flow. So not only do you like to see consistency in that cash flow, but they like to see that you're keeping some money in the bank. Whether it's $1,000 or $2,000, or the more the better, 5, 10, 20, 50,000. Obviously, like if you're looking for a $500,000 and you have $1,000 in your bank account, that might be a little bit of a challenge. So the larger the transaction that you're looking to do, the more money we're going to want to see in your bank account as what lenders call it, and we call it an average daily balance. They don't like to see negatives because everything today, all payments are automated. So whether it's daily, whether it's weekly, whether it's biweekly or monthly, we have all those options. But, if you're having negative, days and you're going, you have NSF fees, right, and you're not holding a balance, then a lender's going to be like, well, how are we going to lend the money and collect money back? And we're going to do it through an auto debit. So money needs to be there. Now, like we've also gotten transactions done where there have been negative days. And we understand that, things are moving quickly. If you're buying inventory, laying out money, putting money out for jobs, you might catch a negative day in 1 or 2 NSFs. We can work through that stuff. So I don't want to scare anybody. But if you're like, hey, I really want to look really good, consistency and cash flow. And then industry-wise, every lender has a different thing that they look at in industries. So some lenders love dentists and doctors and hate restaurants. Some purely focus on restaurants. Right. Some love construction. Like we do a ton of construction. Contractors. All the trades: HVAC, electricians, roofing, paving, builders. Like we finance all those guys. We love those businesses. But some lenders that are on our platform, they're like, we don't like contractors. It makes them nervous. So, it's super important that, and that's why when you work with us in National, we can navigate through that. If you just shop online, you don't really know. No one really talks about, hey, we're not going to approve you because of this. They're going to tell you about all the good stuff,
Exactly.
So we navigate through that. So I think the biggest thing is consistency in cash flow, time in business, consistency in cash flow. Your industry matters, but that's going to be really hard to say what's good or what's not because every lender is different. And then lenders do look at your personal FICO. So, you do want to always try and pay attention and keep your personal credit the best it can be. Not only for your business, but for anything that you're going to do in life. You rent a home today, you need good personal credit.
Right. Absolutely. So I wanted to piggyback that into another question. And this is something that, a lot of subscribers, want to know when it comes to having to personally guarantee for business loans, right?
Great question.
So my question is there ever a scenario where a business would not have to, use their personal credit in order to qualify for a loan, or instances where they have to, personally guarantee the loan that they're taking out under their business?
Yeah, really great question. So that really all comes down to the type of agreement or lending product that you're utilizing. And then all comes down to the lender. Some lenders have all their deals are personal guarantees. All their loans are personally guaranteed. Some have both options. And it depends on the lender. Like if you're doing an SBA deal, all of those are personally guaranteed. There's no way to get around it. If you're doing a bank deal today, almost all those deals are now personally guaranteed, unless it's like a multi-million dollar, $10, $20 million bank deal. And there's major history in the company. But for the typical deal, some are personal guaranteed, but some are not. So there's like a business advance, for instance, are not personally guaranteed. Now, a lot of people like merchant cash advance, business advance, there's some negative connotation around those type of deals, but they've come a long way. There's sometimes not the best lenders out there with that, but there's some really good lenders that have great business advance products that are just as compatible as some business term loans. Just as competitive as some term loan products out there. Their rates are just as competitive, and there's no personal guarantee. So those are, in some situations, a no-brainer. There are some equipment financing deals that don't require personal guarantees. And then there are also asset-based or receivable financing, and some of those transactions are not personally guaranteed. The receivable itself is guaranteeing the transaction. So, and then all those have different terms and reasons why you would use one product over the other. If you just need like working capital, you're probably not going to use an equipment financing deal. So, really just comes down to what you're looking to get accomplished. And a lot of people get so wrapped up in it was like the old school way of like, if you do a business loan, it shouldn't be personal guaranteed and you don't do that. But like, it's just so different now. A lot of things are personal guaranteed. And what I say too is like, and some aren't. So it's good to know what your options are. But I think if you've got a great opportunity, you know your business, you know where things are going. And a lot of the loan deals out there are 1 to 2 year, sometimes 3 year terms. It's not like you're signing your life over for millions of dollars over 10 or 20 years. So, like you got to make a business decision in that, situation. And a lot of times people get so hung up on personal guarantees, but they're using all their personal credit cards for their business. Right. Like those are personal guaranteed. Like what, you can't even write off that interest, So, I think we'll help talk through that with you and explain it. And if it's a real big concern, we'll find you an option that's not personally guaranteed for sure.
Yeah, no, I definitely appreciate you for clarifying that. I kind of knew the answer already, but, just for our subscribers so that they can get an understanding, because I think there are sometimes misconceptions about old methods where you wouldn't have to use a personal guarantee in order to get business loans. But as you said, things have changed in the banking industry, and a lot of the unsecured loans are typically going to be personally guaranteed unless you're at the tens of millions of dollars in long company history. So I appreciate you for clarifying that.
We could still even get you an non-personally guaranteed deal that's not like a $100,000 transaction that's not multi-million. It's still possible, but sometimes the terms can be a lot better with a loan, and if you are personally guaranteed, so it might be better to take advantage of the better terms that are out there.
So I also wanted to talk about the equipment financing, because a lot of our subscribers are interested in that because of the Section 179. Can you talk a little bit about, how small business owners can take advantage of that, and, some of the lenders that, may offer that within your network?
Absolutely. Section 179, and, you should always go check with your accountant or legal advisor, for this type of advice, and the laws are constantly changing. But Section 179 is such a great, tax tool. I wish more business owners knew about it, especially the ones that are equipment heavy. But what's beautiful about Section 179 is everyone, you always hear these talks about depreciation. Everyone's always like, how do people utilize depreciation to reduce their taxes? And a lot of people do it with real estate. But what you can do if you're an equipment type of business, or even if you're a business, like if you're, building out a new office and you could finance all that equipment and utilize Section 179. Trucking company, finance trucks, construction, all the yellow iron, and, IT closets. I mean, any type of equipment. What's really cool with Section 179, and it's usually up to about $1 million, and then some industries it's more than that. That's why you should speak to your tax or attorney on this. But what's really cool is if you can finance, so you can use other people's money, the banks or the lenders' money, to go and finance. Let's just say it's $100,000 tractor, right?
Right.
So you can pull. There's two ways to do it. You pull that money out of your cash flow and you buy it with cash. Probably will crush your cash flow. Or you can finance it, and the lender will give you the $100,000 to go finance it. Typically, with equipment deals, we can do them over 3 to 5 years, sometimes 10 years in certain situations, but typically 3 to 5 years. So you can now pay that out over an extended period of time, not take all that money out of your cash flow. But what's really cool is you can finance that $100,000 piece of equipment, and you still get the $100,000 worth of depreciation immediately in year one. So in other words, let's just say you have a profit for the year of $100,000. That depreciation of $100,000 just brings you down to zero, and it almost like wipes away having to pay taxes on that $100,000, which is amazing. So, if you're a business, like we're going to the second half of the year now, if you're like, hey, I'm gonna hit the ground running next year, I got to buy 2 new trucks or a backhoe, or I'm going to refurnish my office. Well, then you should be really looking at financing it. There's some great rates with equipment financing. You should be buying that, before the year's up, so you get that tax credit for this year going into next year. It's really a home run, and so many people don't utilize it. And one thing I want to mention, Antoine, is what's important here is, when you're building your business, it's a lot of times a matter of like a number of funding sources. You might be able to work, you could work with National and have access to multiple funding sources, and a lot of our customers do that. But if you don't want to use a line of credit or a term loan and leverage your cash flow in your business, if you're buying a piece of equipment, because if you buy a piece of equipment, it's tied to that piece of equipment. So what you're doing is you're leaving your cash flow open for other types of financing.
Exactly.
So if you're like, well, let me find some piece of equipment, and they're like, oh, I really need some working capital. Well, we can also give you a credit line coupled with that, so you can use the line for like marketing or payroll or hiring employees, and you can use the equipment financing specific to that piece of equipment. And a lot of people don't really know that or understand it.
Yeah, I mean, I think it's a great way, the example that you gave, someone purchases a piece of equipment, especially a piece of equipment that's going to help generate, some income. Getting that depreciation can help offset all the income that's generated from that piece of equipment.
Yes.
So, well, I know we're, running up on our time. Definitely appreciate you coming on our channel. A wealth of information for our subscribers. For anyone who's interested in, applying for small business financing through National Business Capital, we have links in the description of the video. And also, I wanted to let you guys know that Joe also has a YouTube channel where he puts out content. We'll drop a link in the description of the video as well. You could definitely check that out. Any parting words before we wrap this up, Joe?
The one thing I just want to say, and thank you for having me. I appreciate being on. And like I said, I appreciate all you're doing. You're building a really great channel. So shout out to you, Antoine. It's a lot of hard work. I know it's not easy. So just keep doing what you're doing. You're putting out great, helpful content to help people be better and get good, useful information. So I have a lot of respect for that. The one thing I'll end with is financing is a tool when utilized the right way. And, the old school way was like, don't borrow money, don't have any debt. Debt is a great thing, and financing is a great thing when you're using it as a tool to grow your business for tax advantages. So you really need to know and understand financing, and we're happy to talk that through with you. And if you're borrowing money to grow your business, there's nothing better than that, and it's better than giving up equity. So, to end with, all I can say is, keep growing your business, keep doing what you're doing. If you own a business, I know it's been a wild year and a half, with COVID. A lot of respect for you. Keep up the good work. Keep growing. Stay focused. It's not easy, but it's worth fighting. Fighting through the hard times. And feel free to check out the links below. You can follow me at Grow by Joe. And thanks again, Antoine, for having me. And everyone out there, keep growing.
Likewise, I'm sure everyone will appreciate you coming on, and hopefully we can have you back. So it's been a pleasure.
Anytime, my pleasure. Thanks, everybody. Take care.